In this video, I'm going to show you how to sell cash secured puts on your favorite stocks for a better entry price. I'm also going to go over some of the indicators that I use to flag price movement, and I'll break down the total return on investment when you're selling your cash secured puts. Now let's get right into it. Step one of this process is picking a stock that you want to own. Now this is important because you could be assigned these shares and you would have to buy 100 shares of this stock. So picking a stock that you want to own is very crucial, and it is step number one. The stock that I'm going to use in this example is going to be PayPal, but I'm going to show you some other stocks that you could use as examples if you have a smaller account. I'm going to link to the video that I did on PayPal so you can see why I'm picking PayPal as my stock to use. Now step number two is have a good price in mind. I'll admit this is the hardest step for me because I usually like to jump in. I still have a bit of FOMO, usually jump and try to pull the trigger on the stock before a good entry price. So step two is a very hard step for me, myself, but having a good price in mind is very crucial. So now we're going to take a look at PayPal, and these are some of the indicators that I'm going to use to track the price movement. As you can see, PayPal had a large drop a couple days ago. This was partly because most of the market sold off during the new year, and just more recently they also got a downgrade from Oppenheimer, and they're putting a price target of $72. Now this is just one analyst, and the price right now is about $58.45, so it's kind of well below that $72 mark. So none of this is financial advice, it's purely what I'm doing, and it's for educational purposes only. The first indicator are these moving averages. So as you can see here, this yellow line is the 50-day moving average, and I think we're going to have some strong support at this 50-day moving average. Now I don't want to get in at $58.45, so I'm going to go sell a put at about the $54 mark, which means that if PayPal goes to $54, that is when I'll buy it at the time of the expiration. Now if you'll also notice these little dotted lines here, there's a green dotted line and the red dotted line. These are the Nadaraya-Watson lines, and I am using those indicators to flag when a sharp drop or a sharp rally has occurred. Now PayPal isn't really a good example, so I'll find one that is a better example. So if we take Apple, for example, right? See this little green flag right here? So that is an indicator that Apple has been oversold very recently. And if you look back in history, when these flags occur, they usually have a tendency to bounce off of these flags. For example, here, there's a red flag meaning Apple was overbought. As soon as a flag prints, usually, not always, but usually, it will go back down to these ranges. Now you can think of these ranges, this green and this red, as kind of like Bollinger Bands. And if it moves out above it, a little flag will print. Sometimes they don't print, but usually when they do, for instance here, as you can see, a red flag printed and it will go down in price. A green flag printed down here and it seems to go up in price. Again, these are the Nadaraya-Watson Envelope indicators from LuxAlgo. If you just search under indicators, I have it under my favorites. Down here, you can add it to your chart and it's completely free. Going back to PayPal, since there was a big drop, this was the day I sold a put on it, and it could keep going down. 50 might be a strong resistance, but I sold the $54 put on PayPal. So using these indicators, I will try and wait until the price goes down to the bottom range where this red dotted line is. That is one of the ideal times to sell a cash secured put. Now these indicators aren't always 100% right, and sometimes it could keep going down, but this is one of the tools that I use to help myself. So after you have a good price in mind, kind of a general range area, you can go and look at an options chain to start selling your puts on. I like to use Robinhood to keep track of my options. I don't actually sell the option in Robinhood, I use my Vanguard account, but Robinhood makes it easy to keep track of everything. So you first find the stock that you want, PayPal, and you'll go and click on this trade options button down here, and this is going to bring up what's called the options chain, and you'll want to be selling a put, and you'll want to pick an expiration date. So I'm going to go to February 2nd, which is about 30 days out. And as you can see, I have already added this $54 strike price to my watch list, which means I actually went in and sold the put on this. But just a quick overview of what this option chain means, you'll see that right in the middle is the share price of PayPal right now at $58. And as you go lower, below $58, these prices right here, this is called out of the money. So all of these options are out of the money right now. Now you want to make sure $54 is a price you're comfortable with. How options works is that one contract represents 100 shares of a company. So in this case, $54 is actually going to be $5,400 because you'll have to multiply this $54 share price by 100. Now this is just the strike price. The price that you get for selling this put is 88 cents right here. Now again, 88 cents times 100 would be $88. So in this case, you would be making $88 on $5,400 if you were to sell this put. Some other details to note, you can look at this metric, which is called the delta, and it roughly correlates with this chance for profit. And what this delta means right now is that there's a 0.25 or there's a roughly 25% chance that you're going to be assigned these shares. Now what does being assigned means? Well, it means that on February 2nd, 2024, the price of PayPal will have a around 25% chance from going from $58 down to the $54. And if that happens, you will have to pony up the money to buy 100 shares of this PayPal at $54. Now that is something I'm comfortable doing because I want to buy this stock. So I'm going to have to keep $5,400 in my brokerage account in order to sell this put. If you have a smaller account, you can pick a different stock. For example, SOFI. Now SOFI is another one of these stocks in the fintech space that has recently been downgraded, which has caused this dramatic move down here. I'm not in SOFI stock personally. This would be a better play for you if you have a smaller account and if you like SOFI stock, because this is only at $8.42. So $8.42 times 100 is about $842. So you would need $842 in your brokerage account in order to sell cash secured puts on SOFI. So depending on your account size, you may need to find stocks that are a lot cheaper, such as a SOFI, or another one that I look into when I sell these cheaper cash secured puts are the Bitcoin miners. One is CleanSpark. And if we look at the indicators right here, it recently dropped below this dotted red line. So here might have been a good time to sell a put. And for CleanSpark, you would need about $1,000 in your brokerage account in order to sell that cash secured put. So for the sake of this video, I'm just going to choose this $54 that I have already sold a put on. And this is actually this put I have sold. So when I added it to my account, I actually sold it for 95 cents, or $95 is what I got in premium for it. Right now the price has dropped down to 88 cents, which is a good thing, because eventually if the price of PayPal does not go from $58 to $54, that's called expiring out of the money. And when that happens, this will eventually become worthless. This option will expire worthless, out of the money, and I won't get assigned. Nothing will happen. The only thing that happens is I will have collected this $95. I'll go into a bit more detail on the outcomes later in the video. So now that we have sold the $54 strike price put option on PayPal, step 4 is profit. Well, what happens is you will get that $95. In my case, I have already received the $95, which is 95 cents times 100. And I have to keep in my brokerage account $54 times 100 shares, which is $5,400, which means the collateral that I put up, the $5,400, I'm going to make $95 on that money. So how much does that turn out to be? Well, if you take $95 and you divide it by $5,400, you get a 0.018 multiplied by 100. That's a 1.8% return on that money. So you're getting 1.8% return on your $5,400. If you were able to do this for every month, 12 months out of the year, you multiply that by 12, that's a return of 21.6% per year, purely by selling this cash secured put. This does not account for any price appreciation that may or may not happen after the fact. So if you were to get assigned and the price of PayPal goes up, this return would actually be greater because you would capture the return of the price appreciation of that stock. Now, this is not always consistent because not every day does a stock that you want to own get downgraded to a price that you want to buy it at, and the volatility of the stock is also a factor in how much these options are selling for. It may be somewhat consistent depending on how you do it, but a lot of the stars have to align for a good entry price. So step 5 are the outcomes of this trade. Now going back to the chart of PayPal, what could happen at this point? Well, the option that we sold the put on expires on February 2nd. Which means that right now the price of PayPal is at 58 something, 58.45. If the price of PayPal stays at 58.45 on February 2nd, then that put option that we sold expires worthless out of the money. I would have collected my $95 and that would be the end of it. Nothing else happens. That is scenario 1. Scenario 2 would be if the price of PayPal drops down to below my strike price. So if on February 2nd, PayPal goes to $52, let's say. Well, if that were to happen, one thing would be the price of this put option would shoot up. So right now it's at about 88 cents. That would probably double or triple from here. That would put this option in the money because the strike price is now above the stock price. In that scenario, you can do nothing and you will be assigned these shares. So the $5,400 in my brokerage account, it will be taken from my brokerage account and I will be forced to buy 100 shares of PayPal at $54, even though the price has dropped down to $52. That gap between the $54 and the $52, I'm going to have to eat that difference if I were to let this get assigned. Another thing you can do is if you decide to change your mind on the price, you could roll this option out, which means you would have to close this position at a loss. So I sold it at $95. And right now I'm at like a small profit of $7. If this were to triple in price, I would have to lose money to close out this position. But then I could have the option of selling another put at an expiration date further in the future, so maybe February 9th or something like that. And hopefully by selling that put, it would recover some of the losses that I took from closing out this position. So that is called rolling the option. I usually don't like to do that because I'm okay with getting assigned. Even if this does drop to $52, I'm buying this for the long haul. By the end of the year, I'm hoping that PayPal goes up to $70, $80, $100. So $54, $52, I'm okay taking that short-term risk, and I don't really need this $5,400 anytime soon. So that is some of the risks that are associated when you sell these cash secured puts. If you have like a $10,000 account and you were to sell these cash secured puts on PayPal and you got assigned, this would be like half of your portfolio. So like even with a $10,000 portfolio, this is not a good play because you never want more than 10% of your portfolio in a single stock. So PayPal is actually meant for a medium-sized portfolio. If you have that small portfolio and you like the SOFI example, we can do a sell a put on SOFI as well. And if we do expiring, let's say February 16th, which is 42 days out, we can see here that, let's pick this as an example, this $7 strike price. So if SOFI drops from $8.50 down to $7 on or before February 16th, you would have to spend the $700 to buy SOFI. And you would need $700 in your brokerage account to sell this cash secured put. In return, you would collect 33 cents per share, so 33 cents times 100, which is $33. that is the amount of premium you collect for selling this cash secured put. Now real quick, if we do the math on that, $33 divided by $700, multiply that by 100. In this SOFI example, you would be getting 4.71% on your money, which is pretty good. It's actually really good, because if you remember in our PayPal example, we got like 1.8% return on our money. So this is about 42 days. We can make a estimate that if you were to do that for 12 months, that's a much higher return on your money if you were to do this SOFI play. But again, you would have to like SOFI enough to sell the cash secured put on this. Now, I don't know enough about SOFI. I know there's a lot of videos out there. I think SOFI is one of these stocks that a lot of people love, kind of like Tesla. Every time it goes down, every time it gets downgraded, people rage and complain and say that Wall Street is wrong, these analysts are wrong. So let me know what you think about SOFI, if I should take a look at buying SOFI myself. So part of the reason why SOFI gives you a better return on your money is because of the implied volatility. The more volatile a stock is, the more you're going to get paid for selling these cash secured puts. So implied volatility is at 83.87%, which is pretty high. If we compare that to our PayPal example, the implied volatility is only 41% here. So this stock is a lot less volatile than SOFI, which means we are getting paid less for selling cash secured puts on this, which I'm okay with because I like this stock. If this video was helpful to you, please like the video and subscribe to my channel. Thank you.